Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore FinTech Festival, and joining me for this segment, we have Sam Ghiotti. She's CEO of Habitto. We're here to discuss why the funding winter is thawing as Japan's fintech sector starts to bloom. It is great to have you with us, Sam. Welcome to TradeTalks.
Hi, Jill.
Let's talk about the emergence of the funding spring. You just recently closed an A round. How does that signify that you're starting to see some thawing within the funding market?
Well, Jill, the funding winter isn't over. And this is true whether you are an entrepreneur or whether you are a fund manager in private markets. I guess with the exception of a few sectors that are still very buoyant, I would say, maybe even frothy, like in AI. Pretty much everywhere else, the 2024 metrics for funding, they're down in 2023, they're down in 2022, and this is no different in fintech. So I do think you're right, there are some signs of thawing, but I suspect that when spring will come, will be a very different environment. The rules of games have changed significantly, and that means that investors are just less interested in growth at all cost. Yep. They are demanding, profitability earlier in the cycle. They want to see unit economics earlier in the cycle, and that has important downstream implications for people like me, right? Running businesses, building businesses. It means that we need to have greater focus on things like managing risk, right, and being able to think about resource allocation optimally, and I would say maybe a little bit of prudence, which perhaps wasn't required in the previous cycle.
Yeah, I would agree with you. I think it was a healthy reset at the end
Absolutely.
of the day. What about Japan's untapped fintech opportunity? There's been some regulatory shifts, and that's allowing new models and offerings to emerge. Give us some background. Tell us more about that.
Well, generally I would say that the regulatory framework is a great enabler for financial innovation. That is true across all markets. In every market I've been working in, the fintech innovation landscape thrives when it's working with, I would say, a more open stance from the regulator. The Japanese Financial Services Authority, the JFSA, have actually shown some important signs of sort of opening up the market, particularly in certain sectors like payment infrastructure and payment orchestrations, asset management, and distribution, which is where we work. But just from a practical perspective, this is not a revolution of the regulatory framework. It's like a slow evolution of the existing licensing regime. And us, for example, we have been licensed as a new intermediary license, a new framework that came into effect 2021. And this framework, for example, has allowed players like us to enter a market like Japan, freshly from Singapore, with, I would say, harmonized and a simplified regulatory license. Basically means entering a market with a much easier compliance or regulatory burden.
Well, you know how to operate, right?
Exactly.
With the framework that you're operating in. Tell us about the uniqueness of the Japanese market and how the aging population could or is impacting the financial sector. What is that? How do the demographics impact that, and how are younger generations viewing it?
Yeah, no, that's great. Look, the most frequently asked question for me has been why Japan?
Right.
Every investor is asking the same question, and Japan is still generally like a black box, right? When looked from the outside in, but I do think it has great opportunities because the incumbents really struggle to innovate from within. They're great buyers of innovation, and they really struggle to relate to the younger audience, to your question. This is like an audience that knows they're going to live to 100, very unique demographics in Japan, and one of the most expensive economies on the planet. And yet what they've done so far is basically stashing away trillions of dollars in zero-yielding bank accounts. So clearly they need a different money strategy, and they need a different money strategy to be able to live that long and reliably. So they have this really high sense of anxiety that's very unique about the younger generation in Japan, and that's the problem set that we chose to focus on, because we think there's an opportunity to really help the younger generation to make better financial choices.
So it sounds as if it's almost at an inflection point.
We think so, yeah.
Right.
It's an emerging market, right? Mm-hmm. There's a lot of opportunity to grow, and our approach on the market is really to help this young generation to save, invest, protect their assets, and to do so with technology, but also with the sophistication of human empathy.
And to wrap up here, what's a longer term vision and growth? What's next for Habitto?
Well, as you rightly just said, we just closed our A round. We're super excited about that, very optimistic about what the future holds. I believe we have a product that people want, need, and more importantly, understand. So our next challenge is to really monetize this relationship, and we've corralled a really great set of investors that I'm hoping they're going to really help us through this new chapter, not just with money, but with insight, and I'm hoping with also a little bit of discipline.
Yeah. All right, appreciate the insight, Sam. Thanks for joining us on Trade
My
Talks.
pleasure.
And thanks for joining me from the Singapore FinTech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.